Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.
Tonight, job numbers for April came out and jobs are up, but the participation is down. The S&P 500 has its sixth straight down week in a row. And are we headed for a recession? We've got that and more tonight on this Friday, May the 6th, 2022. Hi, I'm Andre Laborde. Welcome to Wall Street Wrap-Up for this Friday, May the 6th, 2022. I hope your week went well. Well, the Federal Reserve this week hiked interest rates a half a point or 50 basis points. Now, that's the most in 20 years. Not since May of 2000 have the Federal Reserve raised this much at one time. Now, to kind of give a perspective, in May of 2000, the last time the Federal Reserve hiked rates this much, the #1 movie was Gladiator. U.S. postage stamps were just 33 cents, and a Big Mac hamburger was $2.39. And April's job numbers came out today from the Labor Department, and the country picked up 428,000 jobs. But the unemployment rate stayed at 3.6%, and roughly 363,000 workers fell out of the labor force last month, which was the first drop since September of last year. Well, coming up tonight, we're going to be having a great guest. We've got Harvard Business School professor Bill George. Bill also is the former CEO and chairman of the board of Medtronic. He sits on the board of directors of ExxonMobil, Goldman Sachs, and Target. He's a CNBC contributor, and best of all, he'll be coming up later on in the show. But first, how did the markets do this week? Well, all the indexes were in the red for the week. It was the fifth straight week of losses for the Dow Jones, and this week, the Dow Jones ended at 32,901, which was down 0.25% for the week. The S&P 500, they closed at 4,123, which was down 0.2 point for the week. And the NASDAQ, they ended at 12,144, which was down 1.5% for the week. Well, let's get to our guest tonight, Bill George. And Bill is the former CEO and chairman of Medtronic. And he's now at Harvard Business School, where he teaches ethics. Very good point. We're always glad to have him. And he's also the director on many boards of Exxon and Goldman Sachs and Target. So let's get to him now. Hi, Bill. Welcome to Wall Street Wrap-Up.
Thank you for having me. It's great to be back. Exciting.
We love having you, too. Bill, question about the economy. Last week, the GDP was at a negative 1.4%, and the month of April ended the worst, and for the NASDAQ, ended the worst since October of 2008. But at the same time, CNBC is reporting that first quarter earnings, about 80% of the companies are hitting their numbers, and there are more jobs opened than they have people to fill them. How do you look at the economy today?
Well, the economy has been hot in spite of COVID and all the pain we've experienced from it. And today the inflation rate is terrible, but CEOs are finding they can raise prices and that consumers will accept that because of all the changes going on. So right now earnings are good, but I think most people look at a rough 2 years ahead. They're anticipating that it's going to be a down couple of years. And my colleague Roger Ferguson, who was on the Fed board, just said today it's inevitable. I'm not sure a recession's inevitable, but we've had good times, and I think people are prepared to batten down the hatches a bit. At the same time, no one can get enough employees. I don't know any employer that can find all the people they need.
What do you think the reason is that there are not enough employees to fill the jobs that employers have?
Well, there are a lot of employees on the sidelines. Let me tell you why they're on the sidelines. Because COVID caused everyone to reflect upon what do I want out of life? How do I find a sense of well-being at work? I'm not going to work unless I'm working for a purpose. It's not just about money. And it's like in Vail, Colorado, they pay you $22 to wash dishes, but people say, I don't want to do that. I don't care what you pay me. So I think the key is, do I find fulfillment in my work? Do I have a sense of well-being? Do people care about me? Am I part of a community of belonging? And does this company have a purpose that aligns with my purpose? If the answer to those questions is yes, I'm in. But if it's not yes, I think I can move around and move. A lot of people figure out how to get by on one income.
This week, they reported on how over 11 million jobs are open, and approximately, I think the number was 4.4 million people left their job just to go look for another one, just because they can.
I can't remember a time in my life when there have been so many jobs open compared to the number of jobs, number of unemployed. I mean, it's like you said, it's just like doubled. See, we're just getting into now understanding the impact psychologically of COVID. And it's been 2 very challenging years, a lot of stress, a lot of mental health, a loss of sense of well-being and fulfillment. And that's what's causing us reflection. I think this is going to go on for a long time. Kind of the not necessarily COVID, but the impact, psychological impact of how people think about their work.
This week, the Federal Reserve raising the interest rates 50 basis points, 0.5%, and it looks like it's already baked in for probably the next one too to be 0.5%, 50. Do you think that they may want to go ahead and move it faster to maybe 75 basis points, 0.75%? Or do you think that would shock the market too much?
But I think the fact that they've gone from 1/4 to 1/2 is a sign that they are moving faster. And like you say, they may do it again. And I think Mr. Powell made that clear. And they are signaling us in advance, so it's not as much to the sharp market. But we have seen the market going down in response to all this because of concerns about a recession and high interest rates. But look, they've got to get it on top of it. And there's no doubt that the Russia's war on Ukraine is certainly raising gas prices, which every consumer is sensitive to. It's certainly raising food prices. These are the everyday products. We're not just talking about luxury goods. We're talking about everyday products. Every American, frankly, every person in the world feels in their pocketbook right now.
Elon Musk had agreed to purchase Twitter and taking it private. Now, with that, half of the country is saying it's going to be the end of free speech, and the other half is going, it's now going to be the beginning of free speech. Elon Musk, or what you're hearing, I mean, you're at Harvard Business School right now, about Elon Musk's purchase of Twitter.
He's a brilliant inventor. He's done a fantastic job with Tesla. He's a person ahead of his time, what he's done with SpaceX, and everything he touches in business has done very well. Twitter is a wait and see what his real objectives are, and everyone's kind of predetermining what he's going to do about speech because he has given off a lot of signals. Now, the reason you're seeing 2 sides on this free speech question is because the country is split on that question. I think we need to get back, what is free speech? Freedom of speech does not give me the right to call you names or racial epithets, to abuse your religion or your sexual identity or anything else like that. That's not freedom of speech. But I don't think that's the real issue with Twitter. I think with the whole question of Twitter being a site for a lot of very negative things, not as much as Facebook. I mean, Facebook's been worse about it, and neither site has fully cleaned it up. So I don't know what Elon Musk will do, but I hope he'll keep that in mind because we don't want to become this a site for insurrections and for a lot of evil things.
Yeah, Bill. I mean, you the former CEO of Medtronic. I mean, you know what it's like sitting in the C-suite. I mean, you just mentioned, he's running Tesla, he's running SpaceX, and now he'll be running Twitter. Most people will never know what it's like to run one company. As far as your time, as far as the availability of your time frame, do you think it can be done?
I don't know. Jack Dorsey tried to do it as well. I don't know any CEOs that can do more than one company at a time. It's an all-in job. It's 24/7 today. We're not just talking. You're on call at all times at 3 o'clock in the morning, like when that second Boeing 727 MAX went down. You're on call. So there's no time when you can just say, oh, I'm gone. Today, because we careen from one crisis to the next. So can Elon pull that off? I think he needs CEOs in these companies. Clearly, and he may be the guy, the owner at the top if he's going to act that way. And I just hope that he'll think about the country and the world's needs and keep it clear on that purpose. I actually prefer social media sites LinkedIn because it's a very good site, and I publish on there 5-6 times a day. And, it's a very thoughtful dialogue with thoughtful people.
It is a good, yeah, it is a very good site, LinkedIn. Well, I'm curious how you've sat on many different boards, and the board of Twitter was trying to put a poison pill or pills to kind of stop him from buying it, while at the same time they did really want to be for sale because they were losing money on a quarterly basis. They just didn't want him to be doing it. Do you think it's sort of like, yes, we want to be sold, but not by you, bought, but not by you? Do you think that the board was doing right by putting up so much obstruction?
Not really. In the end, you have to do the right thing by your shareholders, and you have to recognize that. And I think these obstructions, people are going to find a way. If there's enough money, like Elon came in with a bid that was too good to turn down, a bid at a certain point in time will always take all those limitations off the table. So I don't believe in that. I don't believe in a lot of the two-tier boards and limitations people have now. I think you have to perform, and Twitter hadn't been performing. Let's be honest. Mm-hmm. The company has not performed, and they haven't transformed their site, and they've just stayed in a very narrow niche. And they haven't broadened out like they should. So shame on the management. Twitter's had management problems for a long time, I can tell you. It started out very cleverly, but it's not been going where it should go. So maybe Elon can remake the site, making it into something good. Let's hope he can. It could use it. We could use a solid social media site.
Yeah, and like also a lot of companies, they may have started off with one way and they lose their way into it. Well, I understand that one of the demands that Twitter had was that if Elon Musk buys, they have to keep the contract to purchase it under 120 characters. So who knows?
Yeah, I think that's kind of ridiculous. Why they limit the number of characters like that? I can't say anything thoughtful because I don't get enough space. I can just refer him to an article I wrote.
Well, Winston Churchill one time said, "It takes me 3 hours to think of a 3-minute speech and 3 minutes to think of a 3-hour speech." So yeah, it all depends on what you're talking about. Well, interesting when you're talking about the board and talking about shareholders. Last week we had Ed Renzi on the show, and Ed was the former CEO of McDonald's, and he brought up Milton Friedman and how. And I remember even reading about this. Milton Friedman always said that the purpose of the business is to reward the shareholders, to reward the stockholders of the company, and that was Milton Friedman in the 1960s. Early 70s, maybe even 80s. Do you think that it is still today the purpose of the business is to reward the shareholders? Or, we talked about moving in different ways with Twitter. Is that the same way today?
A lot of things are good for their time. That was 1970 when we wrote that article in New York Magazine. We're in a different era today. Today, you have to take care of all your stakeholders. It's very complicated because everyone feels they have a stake in your company, but you've got to first take care of your customers, and then you have to take care of your employees. And if you don't do those two things, you won't have any shareholder value. And I think also you want to build around a community. I've watched Boeing abandon the Seattle, Washington community and go to Chicago. And I think that's not a good thing. So I think we have a responsibility to a lot of stakeholders. And all the CEOs are very aware of that. It's challenging to manage sometimes because there are a lot of groups that feel they have a stake in your company that maybe you didn't realize they did. But I think, and the way that shareholders make money, I don't think people understand. Shareholders only make money if you create value for your customers. If you don't create value for your customers, you're going to be out of business. We saw General Motors before Mary Barra came in and saved the company. We saw them go that route, and they went out of business. So they were trying to make money for their shareholders. They didn't build good cars, and they didn't take care of their employees. So if you don't do those two things today, there can't be any sustainable shareholder value. Maybe you can get a quarterly earnings or you can get a quick hit, but you can't sustain long-term value unless you do those things. So I look at it like a formula where it's customers first, employees, communities. You do those things well, and then you create shareholder value. And I'm a great believer in creating long-term shareholder value. That's what we did at Medtronic. When I was there, we went from 1.1 billion to 60, and today the company's worth 150 billion. So, somebody's picked up the torch and taken it in a good direction.
You wrote an article, and it was about 3 years ago, may have even been 4 years ago, and it was for the Harvard Business Review, and it was called, Is Larry Fink a Socialist? And of course, in the story, you said it went, no, he's not. But it dealt with the fact that he puts out a letter. He has opinions and views, and for our viewers, Larry Fink is the CEO and chairman of BlackRock, that along with companies like BlackRock and Vanguard and State Street, they own large chunks of stock, like what we were just talking before of shareholders. When a person like Larry Fink writes a letter that he has, his annual letter, and also when he votes the shares of all the shareholders, let's say if you and I and 5 million other people are mutual fund owners, do we own the shares of that particular company, or does BlackRock actually own it? Who's the ownership of that?
Well, you get to vote. You get to vote your shares if you vote them. But I think a lot of times you never see them. So I would say in a lot of those cases, no, they're voting the shares for you, and they have the power. But I hate to say Larry Fink was ahead of his time. He started the CEO letters about 5 years ago, and he was talking about the importance of purpose. And I think he's a purpose person very much ahead of his time in realizing companies have to have a sustainable strategy. They have to have a sense of purpose, or they won't create any shareholder value. So I give him tremendous amount of credit for being a forerunner of what now the Business Roundtable has adopted and what all the CEOs are working to today of the whole multi-shareholder model right now, and that's where they all are. They're finding the complexities of it, as Bob Chapek did at Disney, but that's the model.
But does the person who owns the percentage of the mutual fund the owner of the shares of stock, or is it like BlackRock?
Well, they vote them for you. I can tell you. That's
you're right.
Practically, they're strictly an intermediary. They don't own the stock, but Wall Street is controlled by a lot of intermediaries. You mentioned a few of them. There are a lot more out there.
True, Vanguard.
So it's really an intermediary's game, and the individual is not really in as much control. And that's not necessarily a good thing, but that's kind of the way it is.
You're true. If you're just joining us, so happy to have Bill George, always a friend of the show. We're going to take a break. Don't go away, because we'll be right back. Bill, right before going into the break, you brought up about Bob Chapek. And it was very interesting because I mentioned a little bit earlier that we had Ed Renzi last week on the show. And he and Bernie Marcus started a group called Boardroom Initiative. And this was to kind of, and as he said, the purpose was to give CEOs cover. And to give the boards cover. And right now, Bob Chapek, who is the new CEO of Disney, has come under heavy fire in Florida with Disney World.
Bob Chapek didn't realize who he was representing. He represents a company that serves families. Every kid wants to go to Disney World in Orlando, Florida, and every parent has to take them there. And so they've created a fantastic thing with Disney, with the movies, the characters, everything they've done. And he has a lot of gay employees. And I don't think he realized he was representing them. So he said, I'm not going to say anything. That's kind of a 1980s, 1990s view. You don't say anything. Keep your mouth shut. You can't do that today. Your employees and your customers expect you to be out there and stand for something. Disney's got one of the great brands ever created, but they can hurt that brand if they don't stand for something. And he didn't do that. And I'm not sure he's going to get through this.
True, because at first he even said he did not want to take a position because of the political aspects of it. And then Bob Iger, the former CEO and chairman of Disney, he sent out a tweet in response of standing for the employees. Well, that at least it looked like to me, it looked like it was like a grenade in the whole thing because it was Bob Iger. But I'm curious because of the pushback that for so long, and I'm thinking of like even when the last time we talked, I don't remember if it was before or after, but they had the Georgia voting law or other things that the other side normally never talked. They didn't come forward and say no. But with Ron DeSantis, the governor of Florida, and with the legislature of Florida, they did say no. So do you think that they normally would have, they normally said, well, the other side's not going to really give us any pushback, so what we're going to do is we're going to side with the squeakiest wheel?
That's right. And Disney didn't get out there. By the way, I have the highest regard for Bob Iger, but he should not have undermined his successor. You got to know when to hold him, when to fold him, when to move on, when to run. And he should do that. But he's a great leader. He was a great job. And I think this time he'd rotated off the board, and Susan Arnold's the chairman now. But where's the board on Disney? They should be stepping up to this too. But I think the worst thing you can do is what Chapek did. He changed his position in midstream. He got criticism one side, and because he hadn't stepped up, he changed his mind, and then all of a sudden, now the other side's upset, and he got himself caught in a political maelstrom from which I don't know if he can extract himself.
Bill, you talk to a lot of CEOs. What type of sense do you get when you talk to the CEOs and maybe even the chairman of the boards and such, because of the kind of climate that we're talking about, that they don't want to take a position because both the right and the left buy their products, and if they start to speak up, they may alienate one rather than thinking when they're helping the other. What type of sense are you getting?
You don't have a choice. That's what Chapek tried. He failed. You need to speak up. You need to stand for who your customers are. You don't have to wade into every issue, but you have to decide what issues are really important to your company. You need to decide these a priori, and then you need to go to your board and make sure you have agreement that the board feels that, yes, we want you to speak out, or no, we don't. CEOs are public figures, whether they like it or not, and their voice needs to be heard. You can't send out press releases like Boeing did when the 737 crashed. You can't just stand behind your PR department or your legal department. You've got to be out there in front, and you've got to take a clear position.
Recently, this past weekend, in fact, Berkshire Hathaway had their annual meeting with Warren Buffett. And I don't know if it was the first time, or it may have been one of the first times that companies are being pushed, and Berkshire Hathaway was to be separating the board from the CEO, which Warren Buffett is both CEO and chairman of the board, that they're wanting to separate these. And I mean, you're intimately involved, being both CEO and chairman, and also being a sitting board member on many. What are your thoughts on a CEO wearing both hats?
Well, Warren Buffett, of course, is a founder, and he's, he is Berkshire Hathaway. So he's in a different class, I would say. But I think on paper, they should be separated. In reality now, I think it depends. You've got to have, if you either have to have an independent board chair or you have to have a very strong lead director. But the key is that these people are in sync and they realize their respective roles. You don't want to ever have a power structure between the chairman of the board and the CEO. That is devastating to all the people in the company and could cause great harm. So the key is that they're totally in sync. So I'm very much in support of having a separate CEO and board chair, but they have to be totally in sync with one another.
What are your thoughts on the unions that are trying to unionize segments of Amazon or Starbucks or Apple?
I don't like the idea of an outside union coming in and trying to organize people. If the employees are unhappy and they're being mistreated by the company, then maybe they can organize. And so that's shame on the management. If the management is doing the right thing by its employees, they don't need a union to stand between them and their employees. And I think that's why so many companies outside of government employees and teachers unions and nurses unions have moved away because they realize. But I think the key is the company has to flourish. And so it can't be the company versus the union. So you've got to create a culture and an environment where people feel proud to work there, they feel included, they feel a sense of belonging, and that the company cares about them, and they have a sense of well-being. Companies that do that are not going to wind up with unions. Sure. But I don't think somebody else should come in and try to organize for them. I think you take care of your employees, and then all will be well.
Bill, unfortunately, the clock doesn't stop. I hope you come back. Always enjoy having you.
Thank you for having me. It's a privilege to be with you. Thank you for having me on the show.
Thanks so much, Bill. So appreciate it. Well, if you've got a question about finance or a comment about the show, we would love to hear from you. Make it pithy, make it concise, and write us at Andre@WallStreetWrapUp.info. And now for a look ahead for the earnings and market information for next week. But first, the Patagonian toothfish is marketed for consumption in the United States under what name? We'll have that answer in just a moment. Well, the Patagonian toothfish is marketed for consumption in the United States under what name? Chilean sea bass. The name was invented by a fish wholesaler in 1977, and in 1994, the FDA accepted Chilean sea bass as an alternative marketing name, and I, for one, glad they did. Well, last December, on December 17th, in fact, we were together and I had told you about the federal government's I-bond, or inflation bond, that is paying a 7.1%, but that interest rate was only good until April of 2022, and that's when the new rates were set. Well, now we're in May, and the new I-bond, inflation bond, because of the CPI, the Consumer Price Index, they will now be paying 9.6%. Now, there's certain stipulations. You can only put a maximum of $10,000 per year for an individual. But here's a little secret. Are you expecting a tax refund check from the government? If you are, you're allowed to add up to $5,000 from your tax refund check in addition to the $10,000 as with the government. Now, with the government, there's always strings attached. Now, you can only purchase these bonds through the website. Now, you must hold these bonds for a minimum of 1 year. But remember, if you sell them before 5 years, you lose or are penalized the last 3 months of interest earned from when you sell. And you don't get the 9.6% interest until you redeem them. Now, these are 30-year bonds, but the interest rate is 9.6%, and it's going to be good until November of this year. Well, in a couple of weeks, we're going to be discussing the market with the former chairman of the Securities and Exchange Commission, Harvey Pitt. We're going to be talking with Harvey about Elon Musk's running battles with the SEC, insider trading, fraud in the markets, and so much more with the former SEC chairman, Harvey Pitt. And coming up next week, we're going to be talking with Mark Mahaney. Mark is the Senior Managing Director at Evercore Financial. He's also a contributor to CNBC. Mark has covered internet stocks and technology stocks for over 25 years. And in fact, Institutional Investor has for the last 15 years ranked Mark as one of the top 3 analysts for the internet and tech. So if you've seen your stock portfolio dropping and have tech stocks in your portfolio, you do not want to miss next week's show with my guest, Mark Mahaney from Evercore. And as a reminder, we repeat the show on Sunday mornings, but remember, the best way is to set your DVR so you'll never miss an episode. And that is our show for this Friday, May the 6th, 2022. Hope you've enjoyed it. My thanks to Bill George for joining us this evening, but as always, it's you. We appreciate you for allowing us into your homes tonight. Remember, you can always follow us on all the social media, on Facebook, on Twitter, YouTube, and WYES.org. So enjoy your weekend ahead. Have a great productive week as well. I'll see you next week. For Wall Street Wrap Up, I'm Andre Laborde. And remember, money never sleeps. Good night.
Sponsored by New Orleans Distillers, creators of fine spirits and liqueurs. Through dedication to science, art, and passion, blends of tradition and flavor emerge. For you, always locally crafted. New Orleans Distillers, classically Southern.